The last week or so, I've been giving daily updates on the dollar versus the Indian rupee, and as it trades to new all-time record highs. Today, the currency pair is up again after a corrective move toward the end of last week. I'll talk about the technicals in play for this currency pair in this video, so let's get started. Recall looking at the daily chart that if you take this move to the downside and project a Fibonacci extension, the 161.8 comes in at 90.53. That's this level right through here. The high price that we saw trading toward the end of last week, I guess that's Thursday, came up to 90.437. So just short of that target. Got close, sniffed it, but rotated back to the downside on Thursday and again on Friday before starting a rally into the close and into trading here today, as you can see. So what has the move to the downside and the move back to the upside done from a technical perspective? And if we take a look at the hourly chart, we can get a better view of that move to the downside. This is the correct move to the downside, and what we did in the process was a break below the 100-hour moving average. That's a blue line in this chart. We also broke below this trend line, but we fell short of the 38.2% retracement of this last move to the upside. At 38.2 came in at 89.656, and the low price came in, as you can see, just short of that and started its rotation back to the upside. And more recently, what have we seen? We've seen the old trend line and the 100-hour moving average hold support and trading here today. We came down toward that level on a corrective move before rotating back to the upside over the last few hours of trading. So that move lower is finding support against the old trend line, against the 100-hour moving average, and that 100-hour moving average is now going to be a support target that if it were to be broken, it would give the sellers something to hang their hat on with a potential move back down toward this level right here at the 89.79. That level corresponds with this high and some lows and such through this period right through here. And then below that, we start to look toward the 200-hour moving average, which is now near the 38.2% retracement level. That's this level right through here. So both of those levels will also be targeted on the downside. So that's the roadmap to the downside. Now, we aren't below those levels. In fact, we found willing buyers against the 100-hour moving average and trading here today. So on the upside, what do we have to look forward to? And one is this high right here. Another one is this the underside of this old trend line right through here. And then we start to look toward that high price that we saw in trading last week, and finally the 161% target off of the Fibonacci extension, which comes in at the 90.57 level. Somewhere up here would be the next target above that. So those are the targets on the top side. If we start to take out one by one, getting above the Fibonacci extension level at 90.57, that would open the door for further upside momentum for this pair. So right now, the buyers are making a play. They turned back the selling pressure from last week. They started to reestablish support against the 100-hour moving average. We'll see if they can keep that going. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.